oil to engineering goods, the Gulf is brimming with opportunities. And with Trump's new tariffs hitting Indian exports, New Delhi is wasting no time. It's now deepening ties with the Middle East, and at the center of it all is a potential Doha-Delhi trade pact, set to reshape how India does business beyond U.S. shores. Let's unpack how Trump's tariffs have nudged India closer to Middle East trade, led by its fast-developing free trade engagements with the UAE and soon Qatar. Trump doubled U.S. duties on key Indian exports, from textiles to machinery, as a response to India's continued oil imports from Russia. Analysts estimate this could hit nearly 55% of India's $87 billion of exports to the U.S., threatening growth. That's a harsh blow to manufacturers and exporters who've spent years building their U.S. businesses. So India is acting fast. India already has a strong India-UAE trade partnership under CEPA, effective May 2022. Thanks to it, bilateral trade grew from $73 billion in FY 2022 to over $100 billion in FY 2025, making the UAE one of India's top trading partners. Crucially, non-oil trade between India and the UAE hit $65 billion in 2024, up nearly 20% year-on-year, and the target is to hit $100 billion annually by 2030. This isn't just traditional goods like gems and textiles. The UAE is now eyeing Indian strength in digital technologies, renewable energy, agritech, logistics, healthcare, and fintech. There's more than just trade. A new India startup hub launched in Sharjah, courtesy of a memorandum of understanding between Shara and Startup Middle East. It's a sign that the Gulf Corridor isn't just for goods, but also for innovation and startup ambition. India is even reducing dependency on the US dollar. Trade is increasingly being conducted in rupees and dirhams. That's a game changer for MSMEs and small traders. India's pivot doesn't stop with the UAE. In early October, Trade Minister Piyush Goyal is expected in Doha to finalize the terms of reference for a free trade agreement with Qatar. India and Qatar aim to double bilateral trade to $28 billion within 5 years, and are moving to iron out an FTA this October. Beyond energy collaboration, Doha is eyeing investment in infrastructure, manufacturing, food security, logistics, and tech, diversifying what has until now been a largely energy-centric partnership. Let's be clear, India isn't abandoning the US, but these tariff shocks have exposed a singular risk of overdependence. So New Delhi is pushing multiple trade pacts, with the EU, Oman, Chile, Peru, while also deepening Middle East ties to ensure market access. This diversification isn't just about exports. Qatar's LNG deals already power much of India's energy needs, and UAE's investments and digital cooperation empower domestic infrastructure. However, there's a risk. Negotiating so many FTAs means India must balance openness with domestic protection, especially for farmers and MSMEs. For investors and businesses, this is a critical moment. Trade certainty from the Gulf pacts provides a buffer against U.S. volatility. Middle Eastern investors are betting big on India. Since 2020, over $83 billion in deals have flowed into Indian tech and retail platforms. That's cash backing digital giants like Jio, Flipkart, and Reliance Retail. As India expands access to new markets like Qatar and the UAE, companies can hedge by diversifying their export footprint and potentially secure foreign investment inflows as confidence builds. In short, Trump's tariff shock has reshaped India's global trade axis. The country isn't just pivoting, it's diversifying with purpose. With the UAE CEPA delivering real trade gains and the Qatar deal shaping up, India is building a resilient export ecosystem. That's the emerging story, trade realignment in action.